If you live abroad and are thinking of buying a second home in London, you're not alone. But what does it actually take to make your dream a reality? Today we're breaking down the real cost of owning a second home in London, from stamp duty and deposits to legal fees and tax implications. Make sure you fully understand what it takes to get your next home in London. Hi everyone, thanks for joining my YouTube channel. As I said, I'm a London-based property agent and I love helping clients buy their perfect piece of London. So if you're an international client looking to buy, what are the things you need to consider? Number one, in addition to your purchase price, you're going to have to think about stamp duty, which is an actual tax on the purchase price of the property. Currently, it's a tiered calculation, but there are surcharges depending on your status. For second homes, there's an additional 3% surcharge on top of the standard stamp duty rates that might apply, say, if you were buying for the first time. For example, a £2 million property could rack up $293,000 of stamp duty if you're an overseas buyer and it's your second home. This has an effective tax rate of 14.7%. It's obviously a major upfront cost that surprises many second-time buyers, and it must be paid within 14 days of completion. While it's a big hit up front, we don't have a very high annual property taxes, so over the course of a long time, it does balance out. The other thing to think about is deposits and financing differences. Good news is that most foreign buyers are fully eligible to buy a home in the UK, obviously subject to thorough due diligence verification and checks. But do expect that most lenders may require a larger deposit, at least with a minimum of 25%, but typically considerably more. You also face stricter affordability checks since you already own another property. Mortgage rates will be typically higher compared to a UK resident buying the same property. In terms of tax considerations, capital gains tax becomes a big factor when you're looking to sell. You can only nominate one main residence for tax relief. Any gain on your second property will be taxable, currently between 18 or 28% depending on your bracket. You might also pay income tax if you rent it out. If you've got questions about anything that I've covered so far, make sure to leave me a comment because I'd be happy to respond back, or you can book a free consultation. Investing in the London property market is definitely challenging, but I put out this content every week to help you understand it, but I'm also available to speak directly if you want to consider your specific needs in your situation. Continuing on with our list, the other things you'll need to consider are the running costs, the ongoing expenses of owning the property. Council tax will be one of them, as this is an annual tax to the borough for basic public services such as community services, trash collection, and public safety. Also, maintenance and repairs, especially if it's an older London flat or house. If you're renting it out, you'll have to think about management fees, letting agent commissions, and gas and safety checks. Insurance costs can be higher for vacant properties or holiday lets. If you're thinking of renting out your property, there'll be other regulation and compliance criteria you'll have to adhere to. You'll need an energy performance certificate, gas and safety checks, EICR, and possibly an HMO license depending on the setup. Also, a tenant deposit scheme will be required. As a landlord, you'll also be subject to compliance with the new Renters Reform Bill and changing local council regulations. Obviously, if this is an investment, you're going to want to avoid void periods and bad tenants. We can cut into your expected returns. We look after quite a few properties on behalf of international investors, so if you have questions, please let me know. So, why would it still be considered a good investment? Despite these upfront costs, London property has historically held long-term value. There's potential for rental income, capital growth, and diversification. Demand for housing in London remains strong, especially in central London near transport hubs or in regeneration areas. You definitely want to consider holding long-term to offset short-term tax and legal expenses. Some of my tips to make it worthwhile is to work with a mortgage broker who understands second-time buying, as well as help to sourcing private banks that will lend to international buyers, including Americans. Make sure you run your numbers, gross yield, net return, worst case scenarios, and be conservative on your estimations. Look at up-and-coming areas rather than prime postcodes where you'll definitely get a better yield. Explore ownership through a limited company if it suits your tax situation, but make sure to get advice first. Finally, if you've got questions about buying property in London, please reach out, as I specialize in working with international investors and I love working with foreign buyers to help them navigate the market. I offer a free consultation to answer any questions and give you pointers to get started. I've also got lots of other videos about buying in London, so please check them out on my channel. Thanks so much for watching. Make sure to connect with me on the other social media channels or drop me a WhatsApp message. I'm available at +44 770 318 3750. I'll see you on the next video. Bye for now.